Hello, hello. We on here now?
You're on there.
Good afternoon. Hi, this is Chance Barnett, Crowdfunder. I'm here with Rafe Furst. We wanted to take the time to share with you some experience from successes and failures. I'll speak for myself, failures I've had in the past in fundraising, actually on both sides of the table as an entrepreneur and as investors. I'll give you 2 seconds on me, and then I'd love for Rafe to share his experience, a tiny bit about his background, why he's someone who has a lot to share on the topic. I've been an entrepreneur several times over here in the Southern California area. I've been involved with several fundraisers, both for my own ventures and for other people's ventures. And now with Crowdfunder, helping a much larger audience of startup social enterprises and small businesses. I've watched people rake in tens of millions of dollars with what seems like a very short, elegant, not much information pitch and be stunned by it. And I've also watched people build really complex, amazing, detailed pitches and get no money. So what I would hope to share is some of the insights I've seen, some of the hacks, if you will, of fundraising strategy, and then some of the leverage you can use both online and offline, both in your presentation and some of the tools out there, including crowdfunding. So Rafe, I'd love for you to share a little bit about who you are, your background, and then we'll talk about what we're going to talk about.
Absolutely. So very briefly, I'm an entrepreneur. I'm an angel investor as well. I started or directly been involved in the startup of half a dozen different ventures, starting in the mid-90s in Silicon Valley. And probably have done about 40 different investments of the angel variety over the years, and also have coached and advised and mentored entrepreneurs who are looking to raise funding. So I've had several different perspectives on it, and like you, Chance, I've had both successes and failures. And those failures, that is, tend to be the biggest learning experiences. So without further ado, why don't we get into it?
Yeah, so let me give you a quick overview of what we're going to share, talk about. We had planned to do roughly 30 or so minutes, and then also get to some questions. What we'd love to do is have you sharing your questions during this and after with us via Twitter. So if you tweet at Crowdfunder, we'll take a look at your questions and we'll answer a few of those. And if we don't get to them there, then we'll follow up on the blog post that we have for this specific webinar and try and answer some of those there. What I would also encourage you to do is post questions and discussion to our Crowd Impact discussion board, which is at the URL that you saw here, and you'll see again at the Crowd Impact community on Crowdfunder. So without further ado, what we're going to do is really start with some of the theory around what helps create successful fundraisers. That includes your mindset as an entrepreneur and the space to be in. It includes the mindset of investors, how they see things, how they perceive things, and where you need to help them be, both from the psychological side and in terms of how you communicate with them. And then we're going to share more of the hands-on tactics, so the more how-to stuff. So you'll get all this theory, you'll understand why things are happening, but then we'll give you some of the actual tangible stuff to go out and use in your pitching and fundraising. And again, all of these things apply both to communicating with potential investors offline in the real world, and they also apply to communicating with people via crowdfunding, like your Crowdfunder profile for your company. So building your message there also directly communicates to potential investors. So I want you to keep that in mind. So again, we'll start with a theory, and we'll go to tactics. So let's jump right into the theory and the mindset side. One of the first things, Rafe, we had talked about sharing was really the power of story. And the power of story, I think, is endless and maybe one of the most significant things when it comes to communicating with human beings. So I want to zoom out for a second and say fundraising at its most essential is really just about communicating with human beings. And so one of the things that has the most power and the largest ability to transform people's understanding of something, to get them enlisted or excited or become an evangelist or supporter or even an investor, is to get them involved in a larger narrative, something that's bigger than the dollars and cents, even though that's important. So there's a couple of things I know that are really big points in this that you have to say. So why don't you share maybe your first big point around this?
Yeah, so now that's a really good way of thinking about the power of the story. And what I like to do is imagine myself a year later giving a TED Talk about what I did. So what I'm pitching you right now is what I'm going to be doing, but I like to imagine it working backwards. Okay, here's the TED Talk. Because the TED Talk, really is the power of story. They all follow a pretty familiar pattern, and it's actually, surprisingly enough, it's the same pattern that the Obama campaign used to win, and it's a three-part hero's journey narrative. So this is one of the canonical ways you can craft a story, and I encourage you to think about this, pitching as if it were a TED Talk. And very simply, it's in the first 30 seconds, you really want to get people engaged and interested in what you have to say. And so personal information, personal story, and even sometimes vulnerable details are ways that will connect you with the audience. The second part, or the second act in the story, has to do with you and I. So me as the entrepreneur and you as the investor coming together. It's a story of us. And then the final act is a story of urgency, the story of now. Mm-hmm. So the story of me, the story of we, the story of now is the way to think about it.
Just to pick off a big piece of it, one of the biggest realizations I ever had as a huge aha moment around fundraising was after a couple of meetings where I had pitched investors on my own and had a certain response, which I would say was lukewarm. And I sat in a room with a partner of mine who had a very different approach. I at the time, as an entrepreneur, and I still, I think, am challenged with this, can be very deliberate and very focused, and I just want to get people the factual information, and I think they should understand it, and damn it, do it, get it. And so that's one of the things I was going to share on the mindset side, but it's also because of my learning, is that what you're not trying to do is share a ton of information with people. What you're trying to do is enroll them in this narrative, in this story of your life, and give it meaning to how it can relate to them and what their part of it is. And the things I always left out, because I was very rational and logical in my approach in trying to communicate with investors, was that it had nothing to do with how smart I was. I thought I had to prove myself to investors. What it really boiled down to is finding what's going to be important to them about it. Not that I'm good enough or that the business can be successful enough, but tying it into the vision of who they are and why they're the right investor and how it becomes meaningful and personal. And that's what story does. Mm-hmm. It involves them viscerally on every level, rational, less rational, emotional. And so once you can speak to that, engage people on a level, it really transcends, what is your pro forma in year two, even though you should have that stuff figured out too. And the discussion becomes much more nuanced and rich and deep. And it becomes about building a future vision, not about a transaction.
Yeah. Here's a little secret about investors.
Mm-hmm.
Well, two secrets, and they're related to exactly what you're saying. One is that regardless of whether they know this, all investors, they invest with their heart. They make decisions based on their heart. And that's a gut reaction. It has nothing to do with logical, rational arguments. It does have a lot to do with story. Mm-hmm. Every investor says and later acts as if it's a rational decision based on numbers and analytics and whatever. And they never come to a positive decision, only a negative decision about investing with the rational mind. Mm-hmm. So really remember that the story is a story that you're speaking heart to heart, not mind to mind. Mm-hmm. And then the other part of this, the other side of the coin is that, well, we all love ideas and business models and business plans and whatnot. We as investors, we invest in people, especially at a startup or a seed stage level concept. It's really about the people, because it's the execution of the idea that matters, not the idea. And as you probably know, you're going to likely have to change or pivot what that initial idea was several times before you find traction anyway. So as an investor, I look for qualities in entrepreneurs that I know that they're going to both be flexible enough to make those changes from their original idea, but also determined enough and professional enough to manage through that. So.
I want to jump in on that point because it's really important. We're talking a lot about investor psychology here right now, and so part of what we're sharing is using this power story to, as you said, communicate with the heart, not just the head, the mind, the rational mind. It's a wildly important thing, and we're going to share some specific tips on how to do that tactically in your communication. And Rafe also mentioned the importance. Investors do invest in people. They're investing in a founder, oftentimes, like that one leader. And I think it's wildly important. In fact, a lot of investors, I find, and it's a smart thing to do, whether consciously or unconsciously, introduce a series of little tests. Whether it's in the first initial conversation, whether it's a small challenge to an assumption or a statement that you've made as a founder pitching them, or whether it's that they make you work harder for the investment, whether it's in follow-up, whether it's in determination, perseverance, whatever it might be. And to me, that just further proves the idea that they want to validate you. They want to understand if something challenging happens, how are you going to handle that? And I know that's important to me as an investor too. If a founder gets into a challenging situation, how are they going to handle that? Are they going to run for the hills? Are they going to turn on their team? Are they going to manage that stress in a really negative way and start screaming and shouting? And so this piece of the investor psychology is really fascinating, and nothing to be more important to the investor than getting away from the decision about funding this ethereal idea of a company and getting back to who's the person who's going to walk into the office every morning and make sure this is headed in the right direction or change direction when it needs to happen. For sure. Yeah. So those are two big things: head versus heart. To making sure you as a founder can communicate around that and really speak to that potential challenge that an investor might introduce. The other thing we were going to talk about on the more mindset area was rather than, let's say, being perfectly available and saying, I have an investment opportunity and I'm here anytime you would like to talk to me. A lot of people want to make sure that they're trying to please investors and make them happy and be available to them at any time. And the ironic thing that I see as a successful trait over and over and over, whether you like the psychology of kind of gaming or not, is that people who build momentum and who have scarcity around their fundraise, meaning that it's a limited option to invest, that they're going to only spend time with a certain amount of right people that are qualified, have so much more success both in the communication, in the amount of meetings that they get, and then the dollars that they close, which is totally counterintuitive to what most people think.
Yeah, I mean, to that point, how many times have you been uninterested in a product you saw or an opportunity that was available to you until you heard that it was being taken away or there's like limited time or only one left? It's no mistake that it's like a multi-billion-dollar industry, infomercials and these tactics that seem really cheesy, but it's true. It works off of basic psychology of social influence. So scarcity is one of the keys, one of the 6 principles of social influence. And maybe we'll talk a little bit later where you can learn more about that. But for sure, you don't want to make it seem like you have infinite time to talk to the investor because after all, you have a business to run. You're trying to build value that they can invest in. So really important to know.
Yeah. So we mentioned 2 words here, 2 important concepts: momentum and scarcity, and they're tied together. But let's focus on scarcity for a second. There's engineered, like, fake scarcity, and then there's genuine scarcity. If you're, I'll give you an example of what I would perceive as an investor as fake scarcity, and then what I would see and would resonate me as real scarcity. Fake scarcity would be a variety of email tactics that don't relate to things actually happening, that are progress and results and traction for the business, that keep trying to come over to the transom and close the investment.
Hey, we're closing our round next week. Well,
that's a very
it's artificial.
It's artificial. Although timing is important and putting constraints around that, and we'll get to that later. A very real sense of scarcity would be, I'm actually creating results, I'm closing this partnership, or this partnership just closed, and there's likely 2 or 3 other investors who are going to come in, and we're waiting for this partnership to close as traction that would get them in, and they might come in and finish out my round. And if you actually have that traction happening, if you have those things going on that are, or more than you hoping that investors just put their money in, suddenly that's not manufactured scarcity, that's real scarcity, and investors perceive it as a very good thing. Yeah.
And you're just matter-of-factly telling them the facts. Like, this is the reality. The reality is that, you know, we might be oversubscribed here.
Mm-hmm.
They can do what they want with the information.
Mm-hmm. So this relates to, as you can see now, since we just talked about it, this idea of momentum. Mm-hmm. I would say that it's the most single best way to drive forth a successful fundraise is, rather than trying to close on being the perfect company or having the best traction or being the existing market breakout leader or having the largest number of revenues, that if you have the most momentum in your fundraise, meaning you have investors who are circling, you have investors who are already putting first money in, these are all examples of real momentum. Mm-hmm. And if you have growing traction, sometimes that can be better than existing traction that happened in the past. So this, any form of current momentum that you can create during your fundraising round is really fantastic. So as a tactic around that, I would say one of the things I've never really heard people talk about, but I realize that we've kind of done, and I've done in past companies, it's just occurring to me now, is can you plan a specific product launch? Can you plan a specific initiative to kick out during your fundraise? These kinds of things like buy you momentum in a way that you could never produce artificially, right? And they're genuine. And when investors see you show up in their inbox, not from you, but from other people or from news sources during your raise, there's nothing you could have ever said that would equal that amount of proof and momentum, for sure. Yeah. Mm-hmm. So we've talked a little bit about investor psychology, and I know we'll touch on it some more. And then Rafe and I also have some really good resources that we'll share with you at the end of this, that are some other online resources, some thought leaders, and some books that we've learned a lot from and people we know and really like. So we'll share that with you. But I want to move from investor psychology for a second now and talk about the entrepreneur psychology. So I know you have a lot to say about this. Why don't you give me a couple of your top points and we'll dive into them for a second.
Yeah, I think the most important is for you to be 100% committed. And this is, as the entrepreneur, be 100% committed to the fundraise. And the company, of course, but really to focus on when you're raising funding, that's your main job. That's your main priority. Yes, you do have a business to run, and you can't let things fall off the map. But it really does take 100% commitment, and for a variety of reasons. And that is, not only your time commitment is really, really focused, and you're always thinking about this as top of mind, but just your belief. And this is in the more ethereal category or motivational category, but I find that without this element, you really can get lost in the weeds and lose faith. And so it's not necessarily teachable. And so there's a bit of, it's a bit philosophical here, but it really is important, and I don't know what to tell you to do about this to get from 90% committed or have 90% faith in yourself to 100%, but that's what you have to do. And so you have to have 100% belief in the idea and the company and the people you're working with and the vision and the plan. But more importantly, you have to have 100% belief in yourself and that you're worthy, actually, of getting the funding. So that when somebody says yes or when somebody says maybe or says, I'm interested, you don't shy away, you don't back off, you don't lose momentum, and you encourage them that they're making the right decision because you 100% believe it. You 100% believe that you are worthy of investing in it. Because remember, we don't invest in ideas or numbers, we invest in people, founders and founding teams. So,
yeah, I want to jump into that for a second and say, yeah, there is no way to just give someone that belief in themselves. But as an entrepreneur, if you're listening and you're thinking, okay, I think I believe in myself. Oh, but there's moments where I'm challenged. First of all, every entrepreneur has those. Second of all, I would just say, can you reflect on what are the things that you're secretly hiding about yourself and your business that are causing you to not be 100% committed, to not feel 100% secure, and to actually go to lengths to try and avoid those things and hide them as though they're just going to magically go away once money comes into your company. And I would suggest that in order to get to this place of 100% belief, ironically, it's the addressing of those things that are the things you want to avoid most, that you wish would go away, that if you can address those, when those moments come up with an investor where you're pressed and you address those, you won't have to try and remember to believe 100% in what you're doing. It will show, it'll be demonstrated because there's not this avoidance happening.
Okay, can I ask you for some specifics? I'm going to put you on the spot because
sure.
This is the meat of it, and it's very uncomfortable to go to these places. But can you think of a time where you did this in your own life?
Sure. So I remember I had a startup that was in the music space, in ticketing space, that I was raising money for, and I did have a big black box of, yes, I'm experienced in marketing, but there's going to be a challenge in really scaling this. And so in a variety of different ways, yes, I had a strategy, but I didn't have it all figured out in how to really scale that to get to the numbers in the pro forma that you want to get to. This is almost the universal problem for every early stage startup. So there's this projection, there's a marketing plan, and then there's the, oh shit, how am I really going to get there plan, which magically happens in the right startups too. Not everything is perfect and figured out and already hockey sticking. So this is probably one of the most universal examples. And rather than saying, well, I'm just going to either force investors to try and believe that and swallow it, or I'm going to avoid it and change the topic, and they're going to see that I'm not addressing that objection. What can you do, and this relates to things we said earlier about investing in people, to either dig deeper into that plan and at least at a minimum, identify the things you don't know. If you're asking the right questions, then you're going to find the right answers. But a lot of people won't dig in to ask the right questions about those things. So that's the first.
Can I just riff off that for a second, because I think this is a misconception that we all either consciously or unconsciously, but we feel like, oh, we have to have the answer to everything. We have to know everything, and that's not the case.
Yeah.
But acknowledging what you don't know and what you feel might be important to your investor, that's a real key to getting away from this trap.
Yeah, and so ironically, that was going to be my second point, which, no, it's perfect, is that when you start to say, I don't know, the three magic words that most investors don't hear from entrepreneurs, suddenly that's the opportunity for that potential investor to become a strategic investor who's aligned with your vision and is value add and might feel like or actually know more about what you're doing than you do and help you. But if you never get to that place of honesty and critique about yourself and inviting people into the things that might be holes, then you'll never have that opportunity for an investor to get in there with you and say, oh, now I'm looking at the problem with you from the inside out, not from the outside in. Yeah. And that's a big shift that once someone starts to make and spend that time, that's already an investment they're making in you and in your business, which is a great sign. Mm-hmm. But if you have this defensive posture and you don't believe in yourself 100%, you're not going to let anyone into that boundary, personally. Yeah. Not that I've ever done this myself.
I was going to say, there's probably a long list of areas, failures where you didn't do this that led you to that. I know in my case that's true too.
So that's a really great first point on entrepreneur psychology is belief in yourself and what can you do to get to that place of certainty about what you're doing. And then, not identifying the areas that you're just high on your own supply and being honest and more critical about those and starting to be open and ask questions. That's going to be really helpful for you, whether it's an investor or partner. The second thing that I think is really important about entrepreneur psychology is that entrepreneurs, whether they like to admit it or not, look at investors like transactions. They almost think of it as though they could go to a bank, fill out an automated application. As long as the answers are right, then the money's going to spit out. Nothing could be farther from the truth about investors, especially really experienced angel investors or much bigger VC firms. it is the opposite of a transaction. It's really about building a relationship and building it as an entrepreneur long before you need to raise that money. Mm-hmm. And so there's a few different people as thought leaders who talk about this. Some of them are entrepreneurs and some of them are actual investors who share this. But it couldn't be more true that if you're an entrepreneur and you decide to start to get to know investors when you open up your round, you've largely lost the battle before you've started. Sure. But if you know that you want to be an entrepreneur or you're going to have a venture that's raising money in 6 months, commit to spending, something like 10 to 20% of your time building relationships casually, saying, I don't want your money. I want to get to know you. I'm going to be raising money for something I'm working on. Hey, here are a couple of my ideas. And this is also a great opportunity to invite people into your vision in a very soft way where you're not even asking for the money and you might just get involved and in that process become your investor without you even ever having to sell it.
Sure.
Yeah. Have you seen people do this with you as an angel investor?
Not enough. Not enough. And I have to admit that, as an entrepreneur too, raising money, I don't do it enough either. It just, for whatever reason, it's the last thing we're thinking of. But it really is important, as you say, and I've seen it work really, really well, and it is important to build that relationship. And this is, comes back to something we talked about earlier, investing in people, of course. And also, to be honest, scarcity. And I know we're scarce on time, so I'll try to make this brief. But if you're looking to tell this story, that you have something great, people don't believe you if you're coming to them just, at the last minute. So, the relationship building works on multiple levels, and I think maybe we should. Because we're scarce on time, move over to the tactics side of things.
Sure, that sounds great. So shifting over there, we have probably 5 or 6 things that I hope we can get to them all. A few that we've touched on, but I'll start with the first. So what are the specific tactics to engineer the highest likelihood for success for your fundraising campaign? One of the most important things you can do for yourself is set your own time constraints. Your investors aren't going to do it for you. And the reason why it's important is because if you set an unknown amount of time and you allow your fundraise to drag out 2+ or 3+ months, you lose any possibility for momentum, and there is no scarcity involved. It's impossible in an endless cycle to create those things.
Yeah, you gave a really good analogy the other day regarding buying and selling houses.
Oh, yeah. Well, I think it's hard to imagine if you've never done it and you haven't created this, but what everyone understands, I think, is they've watched real estate go on the market, and if a house gets priced at a certain price, who knows if it's the right market price or not. Maybe the real estate agent thinks they know, but they're generally pricing it lower because it doesn't mean much money for them either way. They just want to get it sold. So, but what happens is, it's only defined as the right price if someone buys it within a month or two. If no one buys it within a month or two, then guess what? It's a bad deal. There's something wrong with it. It's stale. There must be something wrong with it. Even if it's a great deal, people discount it, and it'll even say, been on the market over 3 months. Yeah. So this isn't like a figment of my imagination or like sort of happens in investing. This is one of the tried and true things that people respond to.
And one of the key reasons for it is that we look to the cues of the people around us to validate our own decisions and what we should be caring about and valuing and liking. So it's called social proof. So if there's nobody who's bid on the house in 3 months, well, what's wrong with me if I'm the one who wants to bid on this house? So I want to invest in something that a lot of other people, especially people that I trust and respect, are also interested in investing in, or even better yet, have invested in.
Yeah, absolutely. So I think a great tactic, very specifically off of that, is your raise becomes, I would say, exponentially easier and has exponentially higher degree of fully funded success with each credible investor that comes in.
Yeah.
And it's multiplied by each one. So if you can get one first money name in, suddenly you have what I would say is a 20x likelihood of having a fully funded round. If you have two of those, I would say you have a 50x likelihood of a fully funded round. And so, within that, who's to say exactly if it's the names coming in or that you're doing the right thing to get those few names, but the result is the same.
Sure. And at the very least, it's traction and progress and momentum.
Mm-hmm. Yeah, so I think some people actually engineer really creative ways. We could talk about this as a tactic to get strategic investors in the door. One of them might be, is there an amazing partnership that you could set up with a company or someone who provides services to your company that you would want? And rather than taking the actual cash dollar, you could have them become a strategic investor in your company for in-kind services, for equity back.
Sure.
That means they actually do believe in your company enough to take the equity instead of cash, and that you have a strategic investor in your company. And that is so much more valuable than knowing it all around.
For sure. And along those same lines, your advisors are really important. And if you can convince someone who is well-respected and, of course, respected by yourself most of all, to give you good advice and to be overseeing what you're doing, and they're willing to spend their time, which is the most valuable commodity of all, that looks really impressive to investors. So a really great board of advisors or advisory council is worth its weight in equity gold as well.
Absolutely. I can't agree with that or stress the importance of that enough. One of the other tactics I wanted to make sure I touched on, and this is really stolen in some way from someone who put it really, really well, and I've experienced it so much, and I think every entrepreneur who's pitched investors gets this thing happening to them. And our friend Oren Klaff, who's the author of a book called Pitch Anything, calls this specific situation the analyst or the analyst critique. And the situation looks exactly like this. You're pitching an investor, you get to a portion where you're, let's say, talking about your revenues, and the investor stops you and says, I'd like to ask you a question. At what point is your break even, and what are your assumptions in order for you to get there? And by the way, and they have this smug sound in their voice, and of course they don't believe you, and they're starting to ask you for like the most weedsy details in the grain, like what's your conversion assumption for this? And it's at that moment that a raise can be won or lost, that you can fail or you can succeed. And failure looks like, oh, okay, yeah, let me, that number, and to fumble around it and to address that directly and to spend the next 20 minutes talking about it and essentially negotiating and arguing over, do you have enough of what it takes in that specific thing to actually be fundable or not? And what's really happening in that moment is that an investor is saying, I'm having problems believing everything about you, and so let me see if you're going to take the bait and allow me to just wind you down. It's essentially, in my mind and in my experience, an unwinnable conversation. If you're going to spend the rest of your pitch talking about an assumed conversion rate of which no one at the table knows the real answer.
Well, most importantly, this is an area where they know more than you, right? The investor is really just, in a sense, trying to assume the alpha status in the room and show that they're smarter than you, and you can't win that game.
Yeah.
Because they do know more than you about it. So what do you do about this?
So what I suggest and what I do in this situation, I call it validate and reframe. So if you completely ignore that question, it's going to be ridiculous and you're not credible, and that's actually kind of inappropriate and rude too. And it demonstrates that you don't really have the control of everything that's happening. But if you validate that and say, for example, so what I think I hear you asking is you have concerns about the larger model and how we're going to get to profitability and the time in which, and if we have the right marketing strategy. So if you simply repeat back what you think is the larger concern, you've actually expanded the conversation back out of the weeds and into the larger vision and story of your company. So that's the validation, to say, yes, I hear you, let's talk about that, and then reframe that conversation back to the larger story and vision of what you're doing. Because if you're talking about numbers in a spreadsheet, that's the unwinnable investment conversation. Although you can touch on some numbers, you should have traction numbers, you should have market validation. Those are all great things to have. But that's not the story. That's just the rational mind. So you validate that, and then you reframe it to what is the vision? What is the plan? What is the compelling reason why this company is going to be scaling in the future? And what has been my plan and story for that? And what shows that trajectory? And so if you reframe that conversation, that analyst critique, back into your story and larger vision, then you get to avoid that conversation or move away from it in a way that's going to be a lot more helpful to creating momentum around that current conversation.
So in short, you've just validated my very perceptive critique, and you have invited me to say, to look at the bigger picture and say, you know what, that may be true, but it doesn't even matter, because there's much bigger fish to fry, there's a bigger opportunity.
Yeah, absolutely. And no one likes to be the weeds, non-broad, non-vision thinker. So the first piece is still really important. Can you validate that? And do you have facts? Do you have data? What do you have that you know more about your business than they do? So use that against them and say, I've actually spent the last 12 months doing this, and I've developed a lot of expertise. And by the way, I have advisors who are helping me this, but that's not the point here. And I think that's a great way to say it. That's not what matters. What we're here to talk about is if you believe in my company, if you understand what we're doing and why we're going to be successful. So let's talk about what we are doing and what our strategy is for getting there. That's the conversation that's the winnable. That's the conversation that tells the right story.
So Oren Claff, who you just mentioned, author of Pitch Anything, is a master at this. And so one of the things we really encourage you to do, he's actually going to be presenting a Google Hangout just like this in a week or two's time. So encourage you definitely to make sure you're on the mailing list. How do you get on the mailing list?
So make sure you just go to Crowdfunder and sign up. It's all over the site in the top right. You can do a sign up. Sign up with your Facebook or LinkedIn. That'll automatically import your network and connect you to all the people on Crowdfunder who are your friends. So then in a few weeks' time, Oren's going to give what most people pay tens to hundreds of thousands of dollars for and share a lot of his secrets. Again, his book is called Pitch Anything. It's been an Amazon bestseller for months at a time. Oren's, what I think the highest level of credibility I could give him is nothing I could say about him other than he's helped people raise, I believe now, over $400 million in investment as a hired gun for their company.
Yeah.
So this isn't someone who just decided, I think I have an idea and I have some things, because I've interviewed some investors and entrepreneurs. He's a guy who's been out on the road closing dollars, and he's refined this over many years.
Yeah, and if you want to get up to speed in advance, definitely check out his website.
Yeah.
So Claff is spelled K-L-A-F-F. So you can find it on Google.
Final tactic.
Yes.
This is the most important and what everyone seems to avoid. You as an entrepreneur, whether you like it or not, are asking another human being to write a check. And their money is valuable. They've worked hard for it. And a lot of people have different mixed feelings about how they handle money, about money-based conversations. So not only for most entrepreneurs is there a set of stuff wired up in money in general that feels weird, but there's a huge amount of avoidance to avoid one simple situation, which is the looking of the eye of one person and actually making the ask. And that ask simply is, great, so we've talked about this. Are you coming in on the round? And keeping the eye contact. Most people do everything they can in an investment pitch to avoid this final moment. And oftentimes they're afraid to do it for a lot of reasons, but mostly because they're afraid of the rejection and hearing no. Yet it's the most powerful thing if you've created the right level of rapport, built a lot of the things we've talked about with investors. Investors are then actually put in the situation to make a decision. And a lot of people don't understand that even if they're in a pitch meeting, they haven't directly put the investor in the decision-making.
Yeah, 100%. And I couldn't agree more. It's I think the biggest thing that we avoid, and it goes back to this idea of 100% commitment and belief that you are worthy of taking this money as an investment and providing and creating great value for both of us to share, investor and entrepreneur. And that direct eye contact is so important. And I'm definitely going to take lessons from you. We're gonna play test this right now. So Chance, I have an incredible opportunity for you. I've told you the reasons why. will you invest in my company?
Rafe, I'm really glad you asked. I'm really interested. I need to go back and talk with my financial advisor, and can I get back to you in a week?
That's really great, and I understand and respect your need to talk to your financial advisor. As I understand it, you're going to be the one making the final decision, and unfortunately, the opportunity may not be available in a week. So I'm going to ask you again, would you like to come in this round?
Yeah, I'm interested. There's something we can do. So yeah, let's make it happen.
Great. Your word is good with me. Welcome aboard.
And it's so true. We played. This is actually something we've both seen many times, and it happens every time. That even if you've closed an investor, you haven't closed an investor until you've closed an investor twice.
Yeah.
Yeah. So there's always the okay. Well, yeah, but, and what you have to have the persistence and the comfort to do is say, yeah, but, okay, and let me address that but. Okay, let's get that out of the way. Let's get back to the decision. They're always going to avoid making the decision of signing a check.
And it is really uncomfortable. Even for me and Chance here, it's very uncomfortable to do. So I really recommend that you play test it, you practice it. Practice makes perfect. Practice gets you comfortable. So practice it with your friends. Practice in front of a mirror, and you'll be perfect.
So one of the cool things you have as an opportunity today in this new world, in this collaborative world of funding, on Crowdfunder, in the rewards-based space where you can do rewards-based crowdfunding and ask people for money there and close them, even though they're not investors, they might be participants. There's also the very near opportunity to close investors at scale with your personal pitch over video, with your deck. And so one of the things we'll share in a future webinar is more specifics on that, but everything we talked about still applies and then some in this world. The effectiveness of your communication, how you come across as an entrepreneur, and using as much of the proof and authority elements as you can on your Crowdfunder profile, connecting your advisors, having a large follower base of your friends, create social proof or momentum, showing the traction that you're having, but then making sure that you have a compelling message in a video which shows who you are as a founder and actually closes people by asking them to engage and fund.
So Chance, how can I practice this right now on Crowdfunder? What are a couple of ways that I can do this and engage?
So right now you can go and check out companies on Crowdfunder and see some of the companies that have gotten funded. A great pitch video is on This Shirt Helps, if you look for that company on Crowdfunder, or Listen Headphones. Those are an example of two really great pitch videos. And those campaigns were fully funded, no surprise.
Yep.
So those people had experience and knew how to communicate to their audience and knew how to close them.
But what if I'm looking for money right now? What can I do?
So if you're looking for money right now, what you can do is create your company profile on Crowdfunder, and then you can participate in our Crowd Impact contest. This is specifically for social enterprises, for-profit companies with impact goals. For the right strategically aligned companies that are nonprofits, we'll also take a look at your mission and see if we can help get you funded as well. But there's a $30,000 cash prize for this event, and then there's over $100 million in impact investment capital that will be watching this contest and interested in investing in companies that are pitching.
Yeah, that's, we believe, the largest to date social enterprise pitch event in the world. So check it out, Crowd Impact on crowdfunder.com. And finally, what you can do is if you're not a social enterprise, we invite you to take a look at our contribution and rewards campaigns. Look at the ones that Chance highlighted. They're fantastic. This Shirt Helps and Listen. Listen is spelled LSTN. And try to figure out what it is that they're doing right, and then and emulate that for yourself. So.
And in the very near future, the SEC will still be making finalized rulings for crowdfunding. So we expect those to happen in April and May to allow you to market more openly on Crowdfunder to accredited investors. We're currently allowing a few select companies to build profiles and connect with accredited investors privately, but not transact through our platform. So for companies that are on Crowdfunder, there's the opportunity for you to use our network to connect with the 14,000 plus crowdfunders and investors on the platform now. But it's in the very near imminent future that we'll be able to open up that more publicly.
Cool.
So thanks for your time. Hopefully you've asked some questions if you had some. We'd love to be in touch. Make sure you're signed up for Crowdfunder, and we'll be doing these webinars fairly regularly. As we mentioned, Warren Claff, the author of Pitch Anything, will be one of those webinar presenters soon. So stay in touch, and thank you so much.
And if we're going to answer your questions, we're going to answer them on the discussion forum. So there's a discussion forum as part of Crowd Impact Community. Check it out. And if you've been tweeting questions or emailing questions, we'll answer them there.
Great. Thanks for joining.